Testing, testing. Hello? Whoa. Shit. How did it do that? Testing, testing. Testing, 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 testing. Testing, testing. Oh, that doesn't even affect it. Testing, 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 test. This is so strange. I guess I just need to put the mic closer to my face. Closer to my face. Good morning, Michael. I don't know, just if I speak too quietly, speak down here, it'll cut me off. Let me see. Anomaly of all this. Okay. uh, Let me know if my speech is getting cut off, because sometimes when I speak quietly, apparently it might be cutting me off. And that seems to be coming from the headset. I don't know, software, because the physical headset's not doing it. What sounds slurred? No. No, but oh man, I haven't had a problem like that for a long time. But yesterday, I haven't had a problem. What happened yesterday in, I don't know, years. I had a pretty strong drink, apparently. And and then I had dessert, and I guess the sugar combined with the drink, and I was not feeling good, and nearly. Anyway, I made it through, and it was like, I don't know, 5 minutes later, I was perfectly fine. But yeah, sometimes you kind of watch. Boy, sometimes these bartenders can really hand you a strong drink. I forget what I had, but some kind of cocktail. All right. Well, anyhow, everybody, welcome to the show. Welcome to the program. Let me know if I'm cutting out when I speak. That's something we're trying to make sure works well here. What? That's interesting. Yeah, so Tesla had really good earnings yesterday, and actually, that is a surprise to me. I actually thought that it would be more impacted, but apparently not. Well, that's fantastic. So Tesla's doing well last night, overnight, and this morning. And so we are opening this morning. The whole market is riding the coattails of Tesla's good earnings, and we're opening up, gapped up this morning 3%. That's a really strong gap up, and I would not personally be too much of a stranger to taking profits here, to taking some profits on a 3% pop, because that's the market average. So I mean, you're going to be up 5%, 7%, 10% in some names, possibly. Maybe not, but overnight. And so that's going to cause not just yourself to have to take profits, because that's a good gain to clip off, but also everyone else is going to end up probably doing the same, because it's just prudent. So smart money is probably going to be putting pressure on the market by simply taking gains. That's just going to be the way it is in this hard penny tough environment. However, with the Tesla earnings coming out as positive as they are, if Tesla can rally all day, then the market will probably follow. So the main thing we're going to watch this morning, right out of the gate, is all sectors. We want to see if this is going to be a rare, what happens about once a month, 1 day a month, one every 20 days in a bull market, in a normal market. We haven't had a day like this for a long time. But we're going to look to see if everything is going up today. Just green across the board everywhere. Otherwise, it's a rotational day and it won't be the same. But if it's an all tides rising kind of day, I kind of think it won't be, but it could. It could. There's potential here. Then here's the magic. The magic is on an all tides rising kind of day, what we find is that it stays that way all day. So that's a cool little, you might want to write that down. That's a cool little tip. Is that, good morning, Randy, is that on the rare occasion when out of the open and maybe for the first 30 minutes, if you can monitor it that long without having to take profits or cut positions or be defensive or whatnot, after about, some time has transpired and you can clearly see everything's green, then it indicates the whole day is just going to keep rising all day. And it's not, and sometimes it's a beautiful, just straight line. I mean, that's probably maybe once every 20 out of the ones out of 20. So like 1 out of 400. Sometimes you get that. And that's really good. Actually, it's not even that rare. It's probably a quarter of the time. So 1 out of 80. So there's a 25%. So there's a chance this morning, a good chance that we have full breadth, and that will mean it will be an all-day green day all day. And then there's a small chance, like a 25% chance, that if that's the case, that it'll be just a smooth, easy, constant, straight line up move all day. There might be a little glitch here and there, but not too bad. We're at 28 on the VIX. We're sub 28 on the VIX. It's getting to be, I mean, we've moved 5 points on the VIX from 32 to 27-ish overnight, not even with the market open. So if we dropped another 5 on that while the market was open, we'd be at 22. So even to get to 25 or 24, that's so good that, what I'm saying could definitely happen. So we'll see how it goes. The market's opening in a minute and 10 seconds rather. And we're going to be here just measuring the breadth. Okay. And how do you measure the breadth? Well, I mean, you could look at a map of the world. No, stock market map. And if everything is green and it doesn't look rotational, like some sectors are red, then you're looking at possibly a full breadth green day. It's so important for you to learn how to read that. Oh, and you would know that by there should be a 9-to-1 differential between number of green stocks and number of red stocks. That means 90%. It has to be like 90% green or better. And everything's just sort of moving up, and it's just everybody's loving the market. That's what happens, and then it just moves all day in the right direction. Okay, market is open. Ding ding. Let's see. We're off to a bit of a positive start already. Like I said, the VIX 27.97. I got a sneeze. The market's green. Just broke pre-market high. Ah, man, Tesla's dropping, Netflix is dropping. Okay, so the market's going to pull back so far. I mean, profit taking looks to be something that's going to happen here. All right, I'm going to take some off of GE, which looked really good. I need to get rid of a little of that. I'm going to go to the other one that was up a lot was Palomar. Oh, that dropped 5 points right now, so I'm just not gonna. That's not okay. Alta is up and holding. So what I'm doing is I'm shifting into a profit-taking mode, but it is just momentary. Okay, I just got the GE fill, and that was at the ask actually. Okay, so over here on Alta, I am up 3%, but it is a strong overnight gain amidst some of the issues here, some of the red open here. That's relative strength. So I'm putting in a little order to shave a little bit off of Alta. So I'm going into profit-taking mode, essentially, while we continue to monitor how Tesla performs and how the market performs. The market averages are actually doing fine, but Tesla actually is not. Profits are being taken at the open. It's not running, and the breadth is like 70%. It's not 90%. It's like 70%. So right out of the gate, I mean, you need to see the first 30 minutes to be sure, but right out of the gate, I'm acting as a profit taker instead of a profit holder. Profit taker. There, I just got that Alta exit, which also means, it's slamming the asks because I'm asking for the asks because things are looking kind of okay. I mean, the averages are up. But I am taking profits. If you don't take profits, you don't make money, right? So you have to take profits. You need to get good at taking profits. Netflix and Tesla pulling back. Let's see if there's anything else. Maybe I have a put credit spread. I have a Palantir put credit spread at 70%. I will try and put in some orders on that. Close it out at a good maybe 80% max profit. I'll just put that in for the day and let it sit and bake. I do have some PCSs. Hims, JP Morgan, SFM, Hood, Costco, Berkshire, Netflix, Chewy. All right, Netflix bounced. The first bounce on the things that were pulling back whilst the entire market is going up. I do see that consumer defensives are on the decline as well as energy. Whilst tech is zooming. Tech is having a very so that's growth. Very strong reaction on the averages coming from. So Tesla gave off a signal, I guess you could say, but smart money has decided that that's not where they're going to put their money. They're just going to use that as a gauge, and they're putting their money into, Apple, Microsoft, the things that are more slammed, I guess, but Tesla slammed as well. So, but that's what we're seeing. We're seeing tech responding favorably to all this, and yet Tesla not responding favorably to all this. Okay, I have some more movement going on here. The strongest I have is Palomar. Did I take some off of Palomar yet? No, I don't think so. Let's get back over to Palomar. Okay, it hit 155 pre-market, so I'm going to wait on that. I'd like to see Palomar move even more than that. Walmart is up 1%. Okay, we're down to 50% breadth on growth stocks. So this is definitely, you should stay defensive. I'm going to just start shaving profits here because, it's not going to stay. It's not going to stick. A little bit off on Walmart. I'm taking like 10% off on Walmart. 10%. That's not even a lot, but I'm taking profits. It is probably not going to stay here. You take those profits and they just go to your bottom line. And it's like I mean, I'm trying to think of a good analogy, and I'm thinking of like a pool. You're trying to fill a pool, and so you're waiting for your reserve water tank to fill up from rain, and it's raining. And so I don't know if that's a good analogy. And so you've got to open the rainwater catcher and siphon it off into the pool. No, I don't know quite how the best explanation there. I've used the one before where you're climbing a cliff, and it's like your hands go up, but until you take profits, your feet aren't going up. That's probably a really good analogy. So like you're climbing a cliff and you want to get higher, but you can't get higher because profits are what put dirt under. You put your feet higher. So you raise your feet by taking the profits from above, putting them underneath your feet. That's a pretty good analogy. I mean, that's the best analogy I've had. Oh, what happened here? No. Okay. I thought it sold my Palantir. That would probably not be the case. JP Morgan, I'm at almost 70%. We are red on the day. Growth is pulling back. JP Morgan, I'm my put credit spread at 70%. And I also have a position there as well. I'm going to take some profits on. I'm going to take out about 20%. There we go. And then I'm also going to put in an order to close out JP Morgan's vertical put credit spread at a good price, and I'll let it sit for the day and bake. Some pressure on that. And then Costco, I'm up 60% on that to max profit. 60% to max profit. That's a PCS. And Costco's a little bit struggling this morning, so I will try to take that profit if I can get it. I have two verticals on that, so I'll just go in for one, and I'll put in an aggressive order that I can let bake. Oh yeah, it's way back to normal now. Sometimes that happens when you put your when you put those orders in. Okay, Hood, Robinhood, getting a signal from Robin. What's going on here? All of a sudden, the market is really moving strong. Whoa, the market, yes, is really moving strong. Is that because Tesla turned around? No, but Netflix bounced and it's almost a full reclaim. Tesla has bounced as well, but boy, when those negative stocks that were the catalysts or the leaders were pulling back and then bounce, boy, at that bounce, wow, that just supercharged the whole market. Wow, that really moved the averages. When the leaders who were getting profits taken bounced, wow, somebody just said shorts murdered 4 seconds ago. Yeah, that was insane bounce right there. Really strong. And that puts us back to about 60% breadth. So see, I still want to be defensive though. We'll talk about possible entry opportunities in a moment. Unless you see one, say something. Say in the New York subways. If you see something, say something. Close that out. What is that? Robinhood. I'll put some pressure onto the Robinhood PCS that's at 60%. JPM Palantir. I've got all those working. GRND, another one that I have position in, doing well this morning. Now we are getting sector-wise from the open about 85% breadth, but that's not the same as growth breadth. The breadth and growth is still at about 60%. However, across the board on the whole market, we're getting 83% 83% breadth across the whole market. That's the reading that I'm talking about, as far as we want 90% in order to think this could be an all-day green day. So it's not quite an all-day green day type of sign. It doesn't mean that it can't happen. Anyway, over on grind, I do want to take another little piece out there, tiny piece. I've taken 2 quarters out already, but I'm going to take another little tiny piece out. GRND, 50 shares at the ask, which is the high of the day right now. 2045? No, I thought it was 2088. High of the day, yeah. 2049. Let's see if I get that fill. I'll just let that. A lot of positive energy, a lot of green, positive energy in the market right now. But like I said, because of the breadth readings, I would take profits on strength, on anything you have that's strong. Anything else that needs to bake more, I mean, let it bake. But if you've got something browning, time to take them out. Check on them. Take some profit. Palomar, DRS, I'm up 9% on that. I think I took some profits on that yesterday. Oh, it was a couple days ago. I took half of my position out up here, and I'm back to exactly that spot. But what I'd like to do is give it a little bit more freedom for me. I already took out some at that spot, but I will take out some on strength if I need to. Let's see here. Okay, and these put credit spreads. Dollar General on a strong decline, because that's what I was saying, is that the only sector that is falling is defensive, like consumer staples, toilet paper, etc. Dollar General isn't where people buy toilet paper necessarily, but it's where they buy a lot of their life necessities that aren't going away at their best prices, at the most practical prices. And so during hard times and recessions, etc., these are considered defensives, like something like consumer staples. Oh, I didn't know I didn't have my light on. Does that make a difference? Not really. In a couple of days, I'm probably going to be switching over to soon, maybe in 2 weeks, switching over to a laptop computer, because I will be moving to Florida in 2 months. Going to be some transition in the show. Okay, let's take a look at everything again. All right. Yep, it's holding, but Tesla isn't really holding. But Netflix is. Boom, there we go. I just got that at the ask new high. Take profit. GRND, and I'm now up almost 14% on that particular play, which is more than enough. I mean, I could probably take it all off there. 14%, that's great. In a hard penny environment, those are good profits. I'm up right now. I'm up 6%, 6R across my positions that I'm holding. That's really good. So this market is giving right now, and I'm up into things that we determined were going to be worthwhile or potentially leading, and they have been. I picked well. Netflix, actually, you have an opportunity today if you haven't gotten into Netflix, actually, to get in. You could do that on a PCS. Signal right now. 2 days ago was the day to get in. It's up and away, No, I'm going to recommend against that. Yeah. Again, it's just educational purposes, the program. My recommendations are ideas. Contractually, your financial advisor. You aren't forced to do anything I say. And I'm not responsible. Okay. We got that out of the way. Let's see. Yeah, it's pretty mixed. This is not going to be an all-day green day. Nvidia's red. Tesla's red, off of the open. Apple's green, Amazon's green, Netflix is red. Meta's green. Meta's green. We like Meta. That's one of our hot list. Oh yeah, it actually has not been great lately. Trendline resistance on that and really close. Really close to getting up and over trend line resistance. It's a weird, thing. You put a trend line like that, and then if price goes over it, it really works. It does constitute a shift. Whether that's into a sideways mode or an upward mode, that will take time to tell, and it's usually into a sideways mode. The market's doing real well. We're about to make new highs on the day here in the next 15 minutes, probably, potentially. Let's see if there's anything else I need to take some profits on. Walmart, Grind, Ulta, I did all that. GE, I took some on. Palomar, I did. Dollar General, I haven't. All it's because it pulled back. Sell H. I'm just sitting at like break even on Sell H. What does that tell you guys? When you're getting into something that's supposed to perform and it's not performing on a day when everything's performing. And that's called relative weakness. I'm in a spot where I can, at no risk, I can just hold it. I'm a little bit above break even. That's what I'll do for a little while. And if it ends up holding through the day, then tomorrow, I can make a final decision based on how it performs then. But in this kind of a market, to let your money sit on a day when everybody who's supposed to be doing great is doing great, and then you're got some money in something and it's not doing well. Like, for example, think of it this way. By the way, think of it this way. Okay, I'm in, I don't know, 20 positions, right? But think of it this way. This Sell H is in its own world. My money is in Sell H. It's not in the stock market. You know what I'm saying? In other words, make sure you're holding and trading and assessing the risk of things according to the thing. Searching for an analogy on that one, but in other words, don't I've reasoned that I can hold this, but that won't last long. I mean, I don't mind getting rid of it if it's just not going to perform. But I've reasoned I can hold this, but that's only because what was my reasoning? So you remember the rest of them because the rest of the market's doing well, and it's not doing bad. But relatively speaking, it's not doing good when it should be, right? So that's why I was able to reason that I can hold it. But really, if you just look at it as its own thing, as its own market. Just forget about the entire market. What's going on here? Now we can think a little bit objectively. Oh, here we go. Look, when you have a gap open and then it turns red, gap up open, and it turns red at the end of an extension, that's usually a reversal, which we draw with like a V, like this, an upside down V, or whichever side we're on. And it means the next day is probably going to open similarly and then depreciate. It's because it's a reversal. Now, here's some good advice I could probably give you guys. If you were to sell this stock, because you held it, like I got in yesterday, okay, and you just decide to sell it because it's not performing, don't try to get away from that voice in your head which says, but what if it, takes off tomorrow? Because the first thing you've done is you've taken back your capital, and that's a positive. Okay? Whatever that stock does from that point on is none of your fucking business, really. Because it didn't do what you wanted it to do, so you got out. So in a sense, that's correct, okay? So that's half of what I'm trying to tell you. The other half is that other stocks will do what you want them to do. So if you're constantly taking your money back and then the thing goes and you keep missing out on the big moves, that's just the way the stocks are right now. That's really nothing wrong with that. Because when you get in, it's supposed to be well timed. When you get in, you're supposed to see follow through. And in a good environment, only in a good environment, you can hold through some uncertainty. But in a bad environment, you can't hold through uncertainty. See the difference? But the main thing that I'm trying to explain is, don't worry about if you miss something because you're deciding to get out. There's nothing wrong with getting out. You still have the exact same amount of money. And then you simply allow yourself statistically to wait for when a position you get into does what you want it to do. And then when it does, it's a different experience. Stocks are either going to do what you want to do, or they're not going to do what you want to do. And when you're not in them, it's like they're invisible to you. It doesn't matter if they're going to. A stock doing what you want to do when you're not in it doesn't mean anything. Right? I mean, like, come on. Like, just philosophically, if a stock does what you want it to do, but you're not in it, then it doesn't mean anything to you. I mean, you can put it on your list and you can keep watching it, but it doesn't do anything for you. So your only concern is whether or not a stock is doing what you want it to do or not when you're in it. And if you get out because it's not doing what you want it to do, but you worry about what if it does what you want it to do the next day, then that's not the correct decision making, because it's not doing what you want it to do. And what do you do when a stock is not doing what you want it to do? You can decide to get out. It depends. But it's on the chopping block. Let's put it that way. and you could just sell it. You could just take your money back. If something's not doing what you wanted it to do with your money, you just take it back. Just pull it right on back over. And you have the same amount of money the next day. And then if the stock does what you wanted it to do, but you're not in it anymore, it doesn't matter. It doesn't matter. You made your decision when the stock wasn't doing what you wanted it to do. See the difference? So you have to unglue yourself from this fictional imagination, FOMO bullshit story. You tell yourself that, oh, if I had only stayed in. You know? Does that make sense? Well, it was a good explanation. All that matters, how is the stock doing while you're in it? You're not supposed to ignore it. I guess it'd be like ignoring a hurricane because you know that there's going to be better days. That's just stupid, right? You batten down the hatches. You take your money back. If the storm's coming, if it's a bad day, go ahead and take your money back. There's absolutely nothing wrong with that. It is the correct decision. And if things get better the next day or things move along and you're not in things, it doesn't matter. You're not in the things. What matters is how you act on the current situation while you have your money exposed. When your money's not exposed, it doesn't matter. It's all fiction. It's all just possibility. What matters is how you manage the risk that you have open. Okay? All right. What time? All right. We're 3 minutes before the hour. Let's see. We're at about 75% breadth on growth stocks. We're at still 83% total breadth across the stock market, which is still pretty decent. And let's take a look at the trends. Everything is pointing up, but not necessarily trending up. Oh, even staples are up now. It's possible. So that would be like Dollar General as well. It's possible here. We have an inkling of, we have the silver, we have a, what is this? The sparkle, the whatever they say. We have an inkling of a possibility of an all-day green day today. But we would really need consumer staples, XLP, to be trending up on the morning. Here, I'll put XLP up over here. Not staple. Need staples to come up and be green too. Then we know we can hold stuff all day. All right, you guys, have a good morning. Hopefully that helps, and I'll see you back in the group. I'm gonna go run some errands. I'm gonna hit the gym. The dollar's improving. That's nice. It's that parity. The virulent. All right, have a good morning, everybody. Bye bye now.